The New Zealand versus U.S. dollar is trading up and down, but staying below a key moving average. I'll talk about that and more in this video. So let's get started. I want to focus first on the daily chart just to show you what the price action has done over the last few days. You see this low right here. That was yesterday's low. That moved to the downside over the last few days. I've seen the price extend below this trend or this swing area. The swing area is defined by different swing lows through here before breaking to the downside. We came back up to the high of the swing area, found willing sellers through here, here, and here before breaking to the upside right through here. We came back down to this level toward the end of last month, and in trading this month, we've seen the price over the last few days move back below the swing area between 0.5739 and 0.5772. Ultimately, the price is going to need to get back above that swing area to increase the bullish bias or give the buyers some more hope after the declines seen over the last few months of trading. But until then, the bears remain more in control. So let's take a closer look at the hourly chart and see what that is telling us in the short term for this currency pair. And what you notice off this hourly chart is, first off, you see this high price that went back to earlier in October, probably around October 6th or 7th. That high price stalled within this swing area. The swing area, again, defined by different, lots of different highs through here. And before that, it was a swing low or floor here where we had not a lot of different lows through here. So it waffles back and forth, but you can see that at this area, either we find support or we find resistance, and the last move was to the downside. The other thing that you notice off this chart is this high right here. This high came up to the 200 and 100 hour moving averages, a corrective move to the upside, found willing sellers and push to the downside over the next 4 or so trading days. In trading yesterday, we did reach our low price before bouncing back to the upside and toward the end of the day. And in trading here today, we're seeing a move to the upside and to the downside. But what did the high price do today? We found willing sellers against the 100-hour moving average. That automatically sets that area as a resistance level, not only for today, but going forward. If the price is able to stay below that 100-hour moving average, then guess what? The bias remains more to the downside for this pair. If we start to move above that level with any sort of consistency and momentum, then the bias will shift more, at least in the short term, to the upside with the swing area through or high right there, and then the 200-hour moving average coming into play on the top side. This level comes in at 0.5753, and the 200-hour moving average comes in at 0.5764. Get above that level and you start to look toward higher levels in the pair, including the high price that we saw right here in the 50% midpoint. But we'll look toward that level as well going forward. So that's my look at the New Zealand versus U.S. dollar. Right now, the sellers are more in control on the daily chart. On the hourly chart, we'll see if they can keep control going forward. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.